Hello and welcome to this Moneycontrol special Modi 2.0 M&A and Private Equity Outlook. My name is Ashwin and we are coming to you straight from the very svelte One India Bulls Centre, Mumbai. And over the course of the next half an hour, we're going to take a closer look at some of the key deal trends and triggers that will drive deal activity in India Inc. in the second term of the Narendra Modi-led government. Of course, the government has come back to power with a resounding victory, but the economy is challenging because consumption, exports, as well as investments are below the desired levels. So in these challenging times, what are some of the main M&A trends that we can spot? To answer that and much more, I'm joined today by two top deal makers, Aisha Sequeira, co-country head and head investment banking at Stanley India, and Cyril Shroff, managing partner at law firm Cyril Amarchand Mangaldas. Aisha, as well as Cyril, thanks so much for taking out time and joining me on the show. Cyril, let's kickstart with you. If you look at the year gone past, 2018, that was a blockbuster year for Indian M&A, more than $100 billion. You don't see that very often now, do you? But if you look at the trends as of now, so far at least in Q1, if you look at the activity in 2019, deal activity has been rather subdued. Let's look at some of the data. According to EY's quarterly report, in Q1 of this year, we have seen 242 deals and them having a disclosed deal value of $9.9 billion, as compared to 260 deals having a disclosed deal value of $21 billion plus in the same period last year. So there's clearly been a dip. Now the election uncertainty is behind us, but the global trade tensions are still there. Over the course of the year, we have seen a lot of smaller deals, mid-sized deals, not too many bigger deals. How would you assess 2019 so far, Cyril?
So compared to last year, it has been slower, and one of the reasons potentially could be the election uncertainty. But there are a lot of deals cooking, and also there have been some significant restructurings last year. For example, the Bank of Baroda and Vijaya Bank merger. So there's been a lot of that kind of activity. What I'm expecting going forward, in addition to regular deal activity with inbound capital coming in, I expect to see consolidation in the sector, including financial sector. I expect to see more stressed assets deals, and I expect to see privatization. And all of these will be very significant transactions. So in terms of the M&A lead tables and in terms of the M&A activity in general, I'm expecting to see big things happen this year.
So I think in M&A, it's very difficult to look at the market on a year-to-year basis. Some of the transactions that we talked about last year were in the works for multiple years before they ultimately happen. And I think that's how it is, which is it takes a few years sometimes for these deals to happen. All I can talk about is the fact that momentum in wanting to get transactions done in India, capital flow in terms of private capital flow wanting to come to India is at a renewed interest. We've got political stability, which is what people wanted, policy continuation and policy stability. As people look at India over the medium term, 5-10 years, people say very strong structural growth. We've got clear issues that will emerge from time to time as we have some today. But nothing gives me concern or room for pause in terms of saying the M&A momentum that we saw in India last year is not going to continue for the next couple of years. So it's very difficult on a year-to-year basis to say, oh, it's a bumper year and then it's a
Right.
year. Right. But the types of conversations that are being had, the types of capital that people want to be putting into India is as strong this year and in fact stronger than it was last year.
One sector that has hogged the limelight so far is the NBFC sector, which has seen a liquidity squeeze of sorts because of the IL&FS crisis. We've also seen the Diwan housing finance crisis. So do you expect private equity money to sort of be pumped into this sector, which is going through a challenging time, Cyril?
I think there are opportunities, new unique opportunities as well. For example, the latest RBI policy for small banks allows a license on tap. So I feel that might be a way by which a small bank could be a license could be obtained, and such entities can then consolidate a lot of NBFCs. So I think that is where I think you will see the deal activity coming in through that route.
Aisha, if you look at cross-border activity, clearly the most busiest partner of India has been the US. Let's look at the data. First quarter, 28 deals totaling $840 million. But if you look at the deal activity in India so far in 2019, it's majorly been dominated by domestic deals. But still there's been activity on the US front. But we're all aware of the tensions between the US and the China. And trade wars, they're believed to sort of be a roadblock to the bigger mega deals. Which other jurisdictions do you see being active with India in terms of cross-border deals? And many believe that because of the tensions between US and China, that US companies will now be forced to look more at Indian targets. Would you concur?
See, I don't think 840 million or a few billion is the number to look at. The US is a huge economy. The fact is we should be doing more with all of these economies. It's not one versus the other. So clearly there's been a lot of traction in the past with Japan. I think the US will continue to be the major place from which deal activity comes. Europe is going through its own issues, but I think looks to India as a major source for growth. So frankly, I believe that all of these pockets will ultimately end up being, looking to India to invest more. And it's the form of capital that one talks about. So it could be, Canadian pension funds that we've seen a tremendous investment from in the last few years.
They're deep-pocketed as well. Yeah.
And they've seen success in India. I think that's always important. We need to build on success that people have seen. So I think you'll see private capital come from all of these parts of the world in form of private equity. You'll see pension funds. You'll see sovereign wealth funds. We've seen more investments from sovereign wealth funds in the Middle East in the last 18 months than we've seen in many years before that. So I think the good thing that's happening is a broadening of interest from different pockets. I think in terms of the strategic investor into India, I think that will be more episodic than it is going to be a regular flow that we see from these other providers. But I think as people look to India, they really look at growth, they look at sustained growth over the last long period of time. What they're really coming down to is, again, partnership, transparency, and how do we capitalize on this growth? Can India teach us things that we can then apply in other emerging markets? So it's become a broader and deeper conversation, which is good.
Right. So Cyril, she's talking about a very diversified pool of investors from various jurisdictions, and she's clearly saying that the 840 million figure, that's probably just the tip of the iceberg. India could do much more with the US. But let's look at the flip side. What about outbound activity? In the last few years, outbound activity, some of the really bigger ones, they've been in the pharma sector. We've seen a few, 2 or 3 players who have been very aggressive, who have been interested in many of the overseas or outbound mandates. Some of them have also struck luck. Some acquisitions have worked for some haven't worked for some. What about outbound activity as we look at the second tenure?
It's been sort of soft. There are deals that are happening, but there are a couple of reasons why they're slow. One is currency. Secondly, I think most of the large acquisitive type sponsors in India, corporates, have been working through their own issues over here, whether it's the sort of their leverage on their balance sheet or succession or whatever be the issue. So they've been kind of distracted more on domestic issues rather than offshore. But I think the phase is coming back slowly, where they will start looking. As in the next 12 to 18 months, I think you will see some big acquisitions.
Cyril, you touched upon private equity. We've seen a huge shift in the entire behavior of your average private equity fund, right? There were the years when they used to be happy with a minority stake, not too much skin in the game, happy with their standard rights. But now that has changed. Private equity players are now going ahead and making these big, bold, majority control acquisitions. Cyril, I'll come back to you on this one as well. But Aisha, do you see more of that happening as we go ahead? More private equity funds aggressively pursuing control deals?
Absolutely. I mean, I think if you look at just the private equity universe globally, these are becoming bigger and bigger funds, and therefore you're going to see larger check sizes be put to work in India. People now in the last 5 years have seen good exits coming out of India, which was always a big question mark when we talked about India. And therefore, if you put a lot of money to work, of course, it's not going to be passive capital. It's not about control, but it's about controlling your own destiny. It's about having a say. And again, it comes down to who do I partner with, that irrespective of this stake owned, people think about me as an equal partner. So I think that's just here to stay. You're going to see more of those transactions happen. And I think that's very good. I think they bring also insights, perspectives that can make businesses here, And
a lot of operational expertise and excellence as well. She makes a very interesting point. A private equity fund would want to control their own destiny. Is this trend happening because now they don't want to depend on the promoters? They've invested in you, we don't want to depend on you, we'll decide our own exit.
So, the way I see it is that private equity are the new strategics. And if you see the sort of trend over the last 1 year, you see so many controlled transactions. And it's not just about not depending on the promoters themselves are seeing this as a good way of kind of exiting, where they struggle with taking the company to the next level because of either lack of technology or lack of managerial depth. So they see this as a convenient way of exiting and getting reasonable valuations by getting a controlled transaction done with private equity. And then the PE player coming in and being able to actually do something significant with the company by restructuring it, splitting up the business, or just bringing in a completely sort of new approach to business. So undoubtedly this is the new trend. And I think the time of where private equity comes in and takes minority stakes and lets the promoter run, those are few and far between. I think that stage has passed.
Right. So I'm going to try and tie in what both of you have said into my next question. You referred to the global domestic funds, the Temaseks of the world, the CPPIBs of the world, the CDPQs of the world, the RDRs of the world, different jurisdictions, Middle East, Asia, Canada. Are they looking at India now more aggressively than ever before because of lower yields in their respective countries? And Aisha, do you think that these sovereign wealth funds will now be a formidable rival to your regular PE fund in terms of controlled transactions in India? And do you see them owning more and more assets?
Yeah, so I think it is not about yield differential as much as it is about the fact that there is a lot of capital that needs to be put to work. If you look at the world globally, you see the US, which will continue to get the majority of all of this capital. But when you look elsewhere, India does offer some pretty compelling investment benefits. It's also the fact that we've got such a strong domestic profile from a consumer perspective. When some of these countries age is when India is going to be at its peak earning cycle because of our demographic profile. So people look at asset liability matches and they say there's a great fit with investing as a country in India. So people are not investing for a 1 year yield story. I mean, that doesn't make any sense. What people are saying is over the longer term, economy that we know can grow at 6 to 7%, that has the underpinning of this domestic consumer story, is somewhere we believe we can be in for the long term. And I don't really look at it as a competitive dynamic. Some of these funds that they're talking about are the LPs for the large private equity funds. Oftentimes they work together. So it's not about competition, it's not about either or. The good thing that has happened is we needed to have a broadening of the capital available to companies in India as they continue to grow here.
That also leads to better valuations, right?
And that is basically what we've achieved.
Right.
And I mean, look at the options that an investor has in the world. If you look at other emerging markets, I think India clearly stands out as a place where there is growth and potential for significant upside.
Cyril, now let's talk about a topic which is really close to your heart, and that's the IBC, the Insolvency and Bankruptcy Code. Big bang reform by the government, definitely changed the entire dynamics between the average promoter and the banker. But if you look at the stats, and I'm not being pessimistic over here, these are stats that have been released. There's a 38% success rate in 3 years after companies have been admitted in terms of resolution. Keep that one stat in mind. On the other hand, 378 cases have ended in liquidation, which means 53% of the cases. So there's been more liquidation, unfortunately, than resolution. But this is a new reform. Any new reform, just like the GST or any other, will take time to settle down. But definitely there's been a shift in the entire behavior of promoters and bankers. If you look at one test case, SR Steel, which got a massive offer from ArcelorMittal, but that's still embroiled in litigation. Then you've had the new RBI circular, which a few believe has diluted the whole concept of the IBC. How much of a role do you think the code will play in M&A activity going ahead in 2019?
So Ashwin, multiple points. Firstly, I think there's nothing wrong with that statistic. There's no reason to be either pessimistic or optimistic. It's when there is a new insolvency and restructuring regime, this is the sort of figure that you should expect anyway. There are lots of positive figures as well. For example, if you look at cases above 100 crores, which is what are the sort of significant ones, there's a 42% recovery, which is not bad and which is a hell of a lot better. The time period that has been taken, average time period that has been taken is about 350 days, say roughly a year, as opposed to 10 years earlier. So I think IBC has been a huge success. I think that's point number one. Secondly, I think in terms of, I won't go into any specific cases because obviously I can't speak about them. But so I don't think we should color the whole legislation and the experience by one case being in litigation. It takes usually a decade for a new insolvency regime to settle in any market. And
for every SR, you had a Bhushan as well, which has succeeded.
Yeah, and sort of, and with just 2.5 years, so I don't think we should beat ourselves up too much for one case here and there. I think by and large it has been a success, and I think the platform is set for the next phase. The new circular, which was issued on 7 June, post Supreme Court judgment, and it kind of does a relook at the 12 February circular. I liked how one newspaper described it. It's really the 12 February circular with a dose of humility. So that's probably the right way to describe it, because as I was going through it, I think it's got all the essentials. And in fact, it's got a new feature for NBFCs are also covered.
Do you think it will lead to more resolutions?
Absolutely, absolutely.
Okay. Quickly, I need to move on to a few other topics as well, Cyril. Aisha, if you look at conglomerates, many conglomerates are now ruthlessly focusing on return on capital employed, return on equity. Many of them want to be leaner and meaner. They've got a lot of flap. They want to get rid of these non-core assets. We've seen many conglomerates now doing that very seriously. They're looking at getting rid of assets which do not have synergies with many of their other group companies. How much of a trend do you see this, developing in the rest of the year? Conglomerates shedding non-core assets.
Yeah, I mean, I think we've talked about this for some time, and you've not seen the volume that, people have anticipated for a while. I do think the new dynamic, however, is access to capital. And I think all conglomerates will need to figure out where they want to put their capital to work. And that will result in a list of assets that maybe they don't want to invest behind, and therefore may be better valued in somebody else's hand. So I think that's the conversation, and that's the thinking that a lot of conglomerates will go through. But at the end of the day, I think my sense is a lot of the opportunities will come out from outside of the conglomerate universe too. If you look at today, the beauty of India, it's such an entrepreneurial country. You constantly have new businesses coming up. You constantly have new spaces that have not been done before, where massive amounts of capital are needed, logistics, technology, and so I think it's a combination of all of this that will get the capital.
It leads into my next question: the new economy sectors as compared to the traditional sectors. I'm talking about the e-commerce sector. It's seen various ups and downs. Some of the valuations of these e-commerce companies are even rivaling their listed rivals. They've become that sort of really important to several strategic investors. But e-commerce has also seen a lot of markdowns in valuation. They've seen a lot of companies going kaput. So do you think pricing pressure, Aisha, and a lot of competition, and of course you've always seen a few big investors dominating e-commerce in every jurisdiction, right? Do you see this leading to fewer and fewer players in these niche categories of e-commerce?
See, I think what you've unleashed in India with the success of some of the success stories we've seen in e-commerce is some of our most brilliant people today are wanting to go off and start things on their own. That's something you can now that genie cannot be put back into the bottle. This burst of entrepreneurial spirit with the backing of capital is, I think, going to do some very interesting things in India. That's the nature of a startup. Some will fail, some will succeed. India is going to be no different from the rest of the world in that.
Will it lead to more consolidation, Aisha?
I think in some spaces, yes, absolutely, at different phases of their life cycle. But it will also lead to many more companies coming into the unicorn status, really becoming relevant players. I think if you talked about it, 2-3 years ago, it was like 2 or 3 companies that were unicorns. Today it's over 20.
Every few months we have a new unicorn.
Which is good.
Yeah,
I mean, I think that's healthy. That also, gets people motivated to do their best. So I think that part of the space in India, and actually unicorns today are not just in tech. They are in other spaces too. They are in infrastructure. They are in renewables. They are in a lot of, they are in logistics. So I think that's the good thing, fintech.
Fintech as well, right. I just can't let both of you go without getting answers from you on the budget. This is going to be Finance Minister Nirmala Sitharaman's first budget. A lot of expectations from it because this is the government which, like I said earlier, has come back to power, with a clear majority. So Cyril, what are your major expectations from this budget? What are some of you spoke about a few issues, niggling issues on the tax front, on the regulatory front. Could you perhaps list out a few of them which the FM could keep in mind?
So my expectations from this budget are more modest. I would really expect big things in the next budget in next February, because the time is too short and the inputs are sort of still coming in. But I'm hoping for more clarity on specific things, like just basically tax issues on or some kind of reform on GST, further simplification.
Okay.
I think there will be something on privatization as well. I'm expecting some announcements on the privatization.
Okay.
And also related issues like IBC 3.0 or 2.0, whatever you want to call it.
All right.
So at this stage, I think it's more streamlining. So I would be more than happy with a streamlining budget and go for the big one next year.
Okay, weed out the smaller ones right now.
Because that is actually what is coming in the way of investments.
All right. Aisha, your wish list from this budget?
I think just to add to what Cyril has said, I think this budget will give us the sense as to what the priorities of the government are going to be, for the next term. We've all talked about it a lot.
Signaling.
It's about the signal. What is the signal that we're going to get in this budget?
What kind of a signal do you want the FM to give, Aisha?
No, I think everybody's on the same page. We need more investment, which is going to lead to more jobs. We need a consistent policy framework, and I think we need to, focus on, on some of those things.
All right. Final question. Top 3 sectors, both of you, in terms of M&A activity in the second tenure of the Modi government. Cyril, go for it.
Financial services, real estate, and fintech, taking it separately from financial services.
Financial services, fintech, and real estate. Aisha, what's your
I would
top 3
say
list?
I agree. I think it's financial services. I think it will be industrials, number 2, and infrastructure.
All right. A lot of consensus on the panel today. Always a pleasure chatting up with both you, Cyril, as well as Aisha. Thanks so much for taking out time and joining us on this Money Control special. With that, it's a wrap on this show. Stay tuned to Money Control for more news and updates.